You see it all over social media. There's a fear of the future from some because their value system's changing. The more time I spend on it, the whole crypto space, and the same is happening with technology at the same time, which is what the exponential age thesis is built on, is like, we're about to go through the fastest period of technological growth and adoption in all recorded human history in the next 5 to 10 years. And nobody is prepared for it. Humans are simple creatures. We think in linear terms. We can't understand exponentiality. It's just not something that suits our brains. But let me explain what's going on in crypto. The internet between 1990 and 2000, that's the fastest period of growth for the internet because it went from zero or from low numbers to larger numbers. That period, the internet grew at 63% a year. It was the fastest adoption of any technology in all recorded human history, much faster than the mobile phone that came before it and the telephone became before it. These are network businesses, and I'll come on to that in a bit because it's a really important concept. So crypto is growing at 113% a year. It's the same number of users as the internet had in 97. People told you, oh my God, the dot-com crash, it was a disaster. Well, it wasn't, because out of that came Facebook, Amazon, Google, you name it. It was the start, it wasn't the end. So we're growing at 113% a year. So this is double the fastest adoption of any technology in all recorded history. Okay, that is exponential growth. So we're at about 140 million users as of today of crypto worldwide. If you lower the rate of growth to 83%, to be slightly conservative, you're at 1 billion people by 2024. That's 3 years. It's like, okay, I can't get my head around this, but that's how fast it's growing. And it gets you to about 3.5 billion by about 2027. So basically, you're going to get to half of the world by the end of this decade. That is truly extraordinary. What is that? What is this adoption? The adoption is a network of money and all of finance. In fact, it's a network of value that sits above the internet. It connects all of this digital world into a way that the value is transferable, storable, ownable, recordable. This is the world of everything from Bitcoin, which was really clever. Why Bitcoin was a big breakthrough was because we had developed a new business model that mobile phones had brought and stuff like that. These are network models. It was in fact a guy called Metcalfe, Metcalfe's law, which is you value a network according to the number of users and the kind of interconnectedness they have with each other. And that was mobile phone companies. If you had all of the mobile phone networks in the world added together, right, you got a multiple trillion-dollar business. We just don't think of it that way because it's fragmented. Then you had the network business models of Facebook and Google and Twitter and Reddit and you name it. They started using behavioral economics combined with this data and creating a network of people that were incentivized to post more, share more, like more, do things more. Now, for us as users of those networks, we got the benefit of finding our old school friends and keeping in contact with your cousin and all the stuff that we use social networks for. The shareholders got rich. We didn't. In fact, they took the economics from us. They monetized our eyeballs and our attention. Then comes Bitcoin in 2008, and you've got something super powerful because what you've got is a network where the users of the network have Bitcoin. The value of the network is Bitcoin. So it becomes a network like no other with all behavioral incentives aligned, where everybody is incentivized to grow the network. This is why it grows so fast. So Bitcoin starts the whole process, and then everybody realizes this business model of tokens, network effects, and all of the technological benefits work for almost everything. And that's the rise of NFTs, that's the rise of DeFi, that's the rise of social tokens, that's the rise of so much that's all going on so fast it's hard to keep up with. As investors, the internet was something that you had to make the right bet. Was it going to be Oracle? Was it going to be Juniper? Who was the right player? How did you make the money? It wasn't as easy. This is actually pretty easy in many respects because A, you've got Bitcoin, which is a monetary network. You've got Ethereum, which is basically a platform for all of this. And then you've got a bunch of other things that you can invest in. The whole space is moving in size, and it's much easier investable than, let's say, the NASDAQ was in the past. You didn't quite capture the value of the internet because this is global. When you bought, Juniper Networks back in 2000, that was a US firm. Yes, it was global, but you weren't capturing the global value of the internet. You had to go and buy a share in all of the internet firms. Here, one thing fits all. It is amazing. And I don't know how big this is going to be, but it's a lot bigger than anybody thinks it is. And that is happening at the same time as AI goes mainstream exponentially, robotics goes mainstream exponentially, autonomous vehicles, EV technology, genetic sciences, distributed computing power, 5G technology, or space Wi-Fi are all happening at the same time. And they all are connected, and they're all driven by networks. So it's kind of hold on to your hat. Humanity's not dealt with anything like this before, and it's not going to be easy. You see it all over social media. There's a fear of the future from some because their value system's changing. It was gold and value investing, it was bonds, and it was, that's what I know and that's what I'm comfortable with. Somebody's telling me this internet money is the future of everything. I don't want to know, and then it becomes anger and resentment, and I don't think that's going to go away for a while. It's going to be very unsettling, this whole period, but incredibly rewarding. There's a lot at stake. The regulators are terrified because there is a lot at stake, because suddenly there is a decentralized financial system that is probably broader than finance alone. It's the internet of value, and they don't know what to do. How on earth do you regulate it when you have things like DAOs and decentralized exchanges that don't exist? All you can regulate is your on-ramps and off-ramps. They need to figure that out fast, and the central bank digital currencies is their answer to this, because then you know what connects with what. The regulators know where the world is going, I believe. I don't think they're stupid, and I don't think they're going to stop it. I think they just want to slow it down so they get a chance. Because what are governments actually interested in? They're interested in taxes, and having just gone through this period of excessive government spending over the pandemic and beforehand for the last decade and a bit, they need to raise taxes. So they just want it within their web. They don't want to lose the power of currency themselves, which is what the central bank digital currency is doing, is trying to stop them losing currency, but they're probably going to have to share it. And they're going to have to share power. And this world is going to evolve outside of their sphere of influence, and there's not a lot they can do about it. The dilemma is everybody knows they're being disrupted, including the BIS, the IMF, the ECB, all of the central banks, all of the main governments, and they don't really know what to do. There is a sense of arrogance, which all of us in the crypto market sees as their sign of weakness, is the arrogance, is the non-acceptance of what is really going on. And that usually means they'll probably move too late. There's no way they can deal with this pace of innovation. The sheer number of people at an entrepreneurial level that are involved in this is like nothing I've ever seen before. It's more than I saw with the internet.